Hi everyone, welcome to my channel. Today we're looking at stock market, why it fluctuates. In case you are new to my channel, I would love you to listen to my previous video on stock, what is stock, and also the key terminologies of stocks. So today we're diving into stock market, why it fluctuates. To understand this easily, we'll use a practical illustration using Obi Palm Oil Business. Now, Obi palm tree do not grow every second. They take months to grow fruit. His factory does not double production every minute. So why does Obi palm oil share price change every minute? Nothing dramatic happened to the trees, but the stock price is jumping up and down. What really causes this constant movement? Today, let's understand why stock price fluctuates every minute, even when the real business changes slowly. Obi owns Obi Palm Oil Limited in Lagos. He wants to build a bigger factory. Instead of he borrowing from the bank, he sells shares to the public. You can go back to my previous videos to know what shares is. So let's just make a simple explanation about share. A share means you own a small part of Obi's business. Using Obi as an illustration now. Now his company is listed on the stock exchange and people can buy or sell his shares anytime. Let's see what determines the share price. The share price is simply the last agreed price between a buyer and a seller. For example, if someone sells at 10 naira 20 kobo, that becomes the new market price. If another person buys at 10 naira 50 kobo, the price moves again. Prices can change because buyers and sellers keep entering the market every second. Reasons why stock prices fluctuate. 1. Expectation about the future. Stock prices move based on expectations, not just what is happening today, but what investors believe will happen tomorrow. For example, if investors hear that flooding might destroy palm trees, they don't wait for the flood, they start selling immediately. Even before anything happens, the price drops. The stock market is always a forward-looking market. It prices tomorrow expectation today. In other words, investors are not only looking at what a company is doing right now. They are trying to predict what the company will do in the future. If investor believes Obi Palm Oil will make higher profits next year, they start buying these shares today. As more investors rush to buy, the share price begins to rise. But if investors believe the business may face problems in the future, they might start selling their shares. When many investors sell at the same time, the price begins to fall. So the stock market is constantly adjusting prices based on what people expect will happen next. That is why share price can move every minute, even when the real business has not changed yet. The next reason, supply and demand changes every second. At every moment, someone is buying. At the same time, someone is selling. Some investors are taking profit. Some are afraid of losing money. Each transaction slightly adjusts the price. That is why prices fluctuate every minute. Another reason that causes stock market fluctuation is the big investors. The big investors move the market. Not all investors are equal. If a large investment company buys 1 million shares of Obi Palm Oil Business. Demand suddenly increases, price jumps quickly. If that same investor sells heavily, the price can fall sharply. Large investors can move prices faster than small investors. The next reason is instant information. In today's world, information spread instantly. A simple news alert can reach millions in seconds, and investors react immediately. This fast reaction causes prices to adjust quickly. Another reason can be fear and greed. The market is also emotional. When prices rise, people become greedy, so they rush to buy. When prices fall, people become fearful, they rush to sell. These emotions create constant price movement. In summary of today's video, we see that Obi Palm tree grows slowly, but his share price reflects millions of opinions changing every second. The stock market fluctuates because of changing expectations, supply and demand, big investors, instant information, and human emotions. So when there are more buyers than sellers, the price rises. And when there are more sellers than buyers, the price falls. And that is why stock price fluctuates every minute. Thanks for watching. If this video was helpful, please don't forget to like, subscribe, comment, and share. Thank you.